and market movers. This is The Pulse with Francine Lacqua.
Except it's not. Today it's me. Francine is out. I'm Guy Jonsson, in for Francine. Let's talk about what is happening in France right now. Just over 24 hours since the French Prime Minister unexpectedly resigned, but he remains in place, having been given 2 more days. I'm not actually sure he's still Prime Minister, but there's a series of opinions on that. He's basically been given the job of trying to reach out to opposition parties to try and form some kind of a new budget. The move by President Emmanuel Macron gives a little bit more time to try and figure out what the next steps could be, including fresh parliamentary elections. Let's get a sense of what is happening here. Conni in Paris with some of the answers. What happens next? What does Lecornu now have to do? What kind of a job has he been given?
In fact, he is still outgoing Prime Minister, but currently he is a caretaker Prime Minister until a new Prime Minister is in place, and he's got the heavy task over the next 24 to 48 hours to try and find what he calls a pact of stability. This is what President Macron has been calling for. He's meeting currently with the members from the centrist bloc, from the center. However, the Republicans have refused to join that meeting. He's going to meet with the Republican head, Bruno Retailleau, who basically created this whole drama yesterday and forced him to resign later in a one-to-one meeting. Of course, he will also be meeting before tomorrow night with the socialists who are still calling for one last card for President Macron, which is naming a left-wing socialist prime minister. But now, of course, Macron is really back against the wall. This is the front page, for example, of Le Figaro paper this morning. A lot of the front pages this morning are pretty harsh against the president. You've got 70% of the French who are hoping that he will resign, and 80% who think the solution are either snap elections or him resigning. See, this on the front page, for example, Le Parisien, with the picture of the Élysée Palace, the residence of President Macron. Is there anyone here?
Apparently yes, but maybe not for long. Conni, let's talk about the markets. We're at session lows on the CAC 40. The luxury names are holding this market up. It could be much worse. Talk me through what we're seeing, particularly in the bond market.
There is a kind of a wait-and-see attitude until we actually see a clearer picture on what's happening next. Of course, we had some highs on the bond market yesterday, 86 basis points between the French and the German 10-year yield. And we've talked to many analysts who are saying this could easily go to 100 basis points or even more than this in case of fresh elections. Now, what kind of elections are we talking about is also the big questions. At the moment, the most likely option is obviously new snap legislative elections, just like we had last year in July 2024. But more and more people, even within Macron's own camp, are calling for perhaps an alternative option, which is perhaps a caretaker prime minister just to pass a budget before the end of the year and early presidential elections. This is something, for example, that his former Prime Minister Edouard Philippe has called for this morning, and a lot of people within Macron's own camp are trying to distance himself from the president today.
Yeah, maybe that's why French equities are starting to come under renewed pressure. Those calls are growing louder in Paris this morning. Caroline, thank you very much indeed for updating us. Caroline Conan joining us from Paris. Let's turn our attention to what is happening in Washington. The US President Donald Trump has opened the door for negotiations with the Democrats over healthcare subsidies, but he says the government shutdown, which has entered a second week, must end first.
We have a negotiation going on right now with the Democrats that could lead to very good things.
What kind of
and I'm talking about good things with regard to health care.
The president speaking yesterday, initially opening the door, then appearing to close it. Critty's here with an update. I don't know how much further forward we are. The president is signalling he's willing to negotiate, but the shutdown must end first. The Democrats are never going to do that.
They need a conversation. They need to talk to each other. Clearly, that's not happening. I thought the comments from Chuck Schumer, the Senate Majority Leader, was really crucial because his reputation in Washington is that every time a shutdown comes around and health care subsidies or another Democratic cause is on the table, he is the first one to cape. this time is different. He's not doing it. He's holding out. The Democrats are holding out because there is a narrative that if you don't have these health care subsidies extended, at the end of the day, this is going to have an impact on not just housing and inflation and the things that people voted for and voted on when it comes to the latest election, but also will be voting for when it comes to midterms of 2026, especially when it comes to the rural communities where a lot of GOP leadership are exposed to. So that seems to be the push and pull. But to your point, it doesn't feel like we're any closer than we were a week ago.
Yeah, that's the problem. Let's talk about what is happening on the tariff front as well, because more movement there. Heavy trucks in focus this time. Heavy
trucks in focus. This one's a fascinating one because we've known about this for some time. We didn't have an actual start date of when these tariffs were actually going to be put in place. The November 1st deadline has now been put forward as that starting date. It's crucial, though, because it's not just about exposure when it comes to international firms to trucking and logistics in the United States. It's exposure and trucking and logistics to Canada and to Mexico as well. It's that long-haul trucking routes that are really going to be affected, not to mention the commodities trade between them. We're talking about the big lumber export story from Canada into the United States. Well, how do they get there? Yeah. It's the trucking story, and that's really where you could start to see the ripple effect, not only into the costs, into the stock, but ultimately into things like housing and inflation as well.
Yep, keeping a firm eye on all of that. Thanks, Gritty, for updating us on what is happening stateside. Let's pull it all together. Uncertainty, political instability, all factors that we are having to fold into these markets. The bond market, obviously, watching all of these stories very carefully. Let's get a sense of how we need to price it in. David Zahn, head of European fixed income at Franklin Templeton, joining me around the desk. Good morning.
Good morning.
How wide do French spreads go over Germany if this political crisis continues in Paris?
Well, I think if we continue at the current pace, where it's no change in president and we don't have elections, then probably maybe 95, 100.
Right.
But if we all of a sudden have a change and we have presidential elections and parliamentary elections, then it could move quite a bit further.
How much further?
You know,
you get an RN government. Kind of how would the market react? Let's say we don't know who the next president is going to be, but it looks like it could come from the fringes. It could come from the far hard left or the hard right. Yeah. How would the market react to either of those two scenarios?
Well, so far, RN has been very clear that they want to have fiscal responsibility, but you kind of always question, is that just to get them into power?
Yep.
So I think the market would probably put a discount on them if they did win, and you probably could easily see 120, 150.
150.
And I think that's where people get concerned until they saw the actual platform go through the parliament of this is what we're going to do. And then I think people go, OK, they're reasonable at what they're going to do from a fiscal stance.
Is there a sense within the markets that France is too big to fail? And therefore, by extension, there is policy support if we start to get extreme levels from the ECB, despite the fact that the ECB may not actually have the resources to be able to ultimately back that up?
Well, I think the big thing that France has is part of the EU, and the EU isn't going to let France just fall out. No. So I think from that perspective, you have the EU can support them, you have the ECB can support them. So France is more just going through its own issues, but it will be supported by the rest of the EU. Yeah. They cannot let it fail.
But does France need conditionality imposing on it because it's incapable of delivering the cuts that ultimately are required to get the budget deficit down to 3% from circa kind of 5-6% where we are now?
Well, you could see that, but France has never been very good at bringing its budget deficit down or, in fact, bringing its debt down. So I don't think this is actually a change from past behavior. So I think that the EU could say you need to do this, but putting a big country on notice that you have to do that, it's quite difficult. And especially at the same time that Germany is like upping spending massively. It's difficult to say, actually, you need to bring it down.
How does this get resolved then? Is this just a giant can-kicking exercise?
I think it's a can-kicking exercise until we have a new president and a new parliament. Right. And that we don't know when that will be, 27 at the latest, but it could happen earlier.
But at that point, does the can continue to get kicked? Is there a resolution at some point for the French that the bond market is looking forward to? Is there something that kind of happens here that's a cathartic moment that puts the French story back on a more even keel? Or is it just instability as far as the eye can see?
Well, actually, I think if you have a new president and a parliament that work together, you may not necessarily like the direction of travel that they're taking, but you will have certainty if this is the direction we're going. And I think the bond market can deal with that and price that. It's when you just have this uncertainty of what's going to happen. It could change next week. We could have a new prime minister. That becomes very unsettling for the bond market.
OK. What about treasuries? if we continue along, what's the point in terms of the shutdown where the Treasury market starts to get a little bit worried?
I think the Treasury market is just going to continue in its current pace. The big issue for the Treasury market is lack of data, because all the data is shut off as well.
Yep.
So I think from that perspective, we'll have to see the data come back, and then we'll see how the economy is doing, and that's what it really cares about. The government has been shut down before for periods of time.
Yeah. So the bond market is effectively shut down right now. Because
I think
the government is shut down.
It's trading sideways because the data is more sparse. Yes.
What do you think of the concerns that are growing that effectively gold is replacing treasuries as a safe haven? That people aren't buying treasuries. They want to de-dollarize. They want to kind of take their money out of the United States or not put more money in the United States, and therefore they're buying gold. That's why we got gold at kind of circa 4,000.
Well, we do have gold at very high prices. I think that gold is not a replacement for treasuries because the gold market's much smaller than the treasury market.
Sure.
It doesn't pay you anything. But I think there are people who are saying, well, I want something that has some physical use and value, and gold is that item at the moment. But we've seen these spikes in gold, not to this level, and silver before. And they,
but normally when there's a crisis, the first thing you do is you buy the dollar and you buy treasuries.
Yeah.
People aren't. Is that a significant moment in time?
Well, I think the treasuries probably don't have as much of a bid if there's a major issue, because it depends on, is the U.S. part of that major issue?
Yeah.
And I think that's what's different to what we've seen in the past. Normally, the U.S. is trying to calm things down. And
yeah, sure. But can I, okay, to take that thought a little bit further, is there a connection just on the fiscal front between what is happening in France, what could happen in the UK, what's happening in the United States right now? You look at Japan. Can I draw a line between these events and take away in aggregate from them that there is this kind of growing fiscal concern that, and we don't know where the kind of spark's going to come from in terms of kind of where the crisis is, but if there's a crisis in one, it could, and we saw this a little bit yesterday, yields getting dragged higher, it could cause kind of a little bit of a contagion effect, which could be enough to make things a little uncomfortable. I
think the main area we'll see that is the long end of the yield curve.
Sure.
We've seen that, 10 plus. All markets are actually driven by that from global effect as opposed to just the country effect. I think France is different because it's part of the EU, and so it has more support. The US is the major currency, so it doesn't have a problem.
Yeah.
I think the UK is in a very different point, a different place. Yeah. It actually has to get its house in order, but it may take time for it to do that.
The difference between France and the UK is that the currency is the oscillating factor.
Yeah, the currency can move and it can actually rebalance for you, which is actually quite helpful.
Do you see that happening? What do you see happen? We're inching towards this budget. And there's a lot.
I know. It feels like forever until we get there.
Precisely. It's just kind of, we're going to get there soon. But how big a kind of moment is this going to be? If the Rachel Reeves, the Chancellor, doesn't get kind of the numbers right, is the UK going to... We're focused on France, but is the UK going to be the catalyst? Because it doesn't have this kind of...
Well, it doesn't have to support somebody else, yes. Yeah. And I think that basically at the moment, France and the UK are kind of having a competition of who can do worse at running their country fiscally.
And who do you think is winning that competition?
At the moment, France is doing a pretty good job, but I think the UK could come back.
Right, so a late rally.
A late rally, we could see 30-year yields up 6% in the UK.
Okay, sorry, say that again?
6% in the UK on 30s. Right.
And 10s?
Probably 5.5, yeah. I mean, pretty aggressive that we'll see,
and does that cause a political crisis, do you think?
I think it then makes the government say, all right, we really have to do something, and we have to start focusing on spending.
And the backbenchers listen to that and kind of...
Hopefully.
It's going to be fun. David Zahn, nice to see you. Thank you very much indeed for joining us, Head of European Fixed Income at Franklin Templeton. Coming up, we're going to head to the JPMorgan Textiles Conference. We are going to be joined by Noor, Sweid, the VC firm from the VC firm Global Ventures. We'll get her thoughts on what is happening in the Middle East, Africa. That conversation coming up next with Tom McKenzie. This is Bloomberg.
We now have an ability for enterprises to build agents in a much more visual, much more intuitive way. You've heard us say 2025 has been the year of agents. We think that's true. Codex has been a great example for us of that. Our coding agent now available through an API also.
The lead time to make software is a lot shorter.
It's gotten a lot shorter. I think you saw today we live demoed, I think 3 or 4 different things that we've built in real time. We expect that to continue to be the trend.
If you're going to be a tech exec, you've got to have a cool name. Brad has a cool name. OpenAI COO, Chief Operating Officer Brad Lightcap, speaking, of course, to Bloomberg's Ed Ludlow. Let's talk about what is happening in the emerging market space. It was really interesting. We heard from Mario Draghi yesterday talking about the fact that Africa and certain other markets like that may not be beneficiaries of the AI story going forward, but other emerging markets certainly look as if they are going to be big beneficiaries as maybe analysts pull money, as investors pull money out of the United States. Analysts by Bloomberg Intelligence has found that emerging economies are shifting away from financials and more towards tech. Therefore, this is the perfect place to start our next conversation. Bloomberg's Tom McKenzie is down at the JPMorgan Techstars conference. Tom.
Guy, thank you very much indeed. And we'll start there and bring in Noor, who is the managing partner and the founder of Global Ventures. They have about $400 million of assets under management. They have 3 funds. They're raising a 4th fund. And Guy was setting up the picture there in terms of the flows of capital into your region, the Middle East and North Africa. And before we get onto the 4th fund and the opportunities you see, just talk to me about those international flows. Are you seeing a material pickup in international flows of capital into your region?
We are. So last year, the region across MENA had about $2.4 billion of venture funding, of which 52% was international. So those are international VCs investing in the region or international LPs coming into funds in the region and really fueling that venture growth. So there is an opportunity there. When you compare that with 7 years ago, it was about 20% of a much smaller number. So there is that huge appetite.
What are the catalysts for that increase in international
Part of it
flow?
is that the region has become a technology hub. So the UAE has become a technology hub. Saudi Arabia is growing as a global hub for growth markets. When you take a look at both countries, their GDP growth rate this year was about 6%, which puts it way up there in terms of growth markets, emerging markets. And the other thing is that the UAE has indeed become an innovation hub. Thinking what's happening in AI, in blockchain, the government's very avant-garde in regulating these industries.
What is the AI proposition then in the MENA region, in the Middle East and North Africa region? What is the standard? What are the startups in your portfolio and those that you're looking to invest in doing differently that will differentiate them in the AI space?
So part of it is the infrastructure in Arabic, so Arabic LLMs for healthcare that are being used by government. When you take a look at healthcare as an industry, we have 1 doctor per 1,000 people. Europe has 4 doctors per 1,000 people. So if you take that same concept that we had in fintech, which is we're not going to bank people using banks, we're going to use fintech. We're not going to provide access to healthcare and other industries in the traditional way, we're going to use tech. So what's the best way to bring tech in or AI in right now to accelerate that? So if you can have an Arabic LLM for healthcare that becomes a first port of call for access to care that JS is now using, which is in the UAE, and companies and governments of that nature, then you end up in a way where you're leapfrogging. So you're using AI technology to leapfrog industries and to create new industries rather than trying to emulate old ones. So it's an accelerant of access to healthcare, financial services, education across the board. How can we accelerate access for the population?
And you touched on a number of sectors there. Is that where you're raising this new fund, so Fund 4?
Yes.
Which segments of the capital structure are you aiming at, and what different segments and sectors of the tech ecosystem are looking most attractive to you right now?
So right now we think fintech, health tech are very attractive, but we're also very focused on supply chain tech and agri-tech. Food security is a big thing. We still import 85% of our food. We don't think that'll be the case 5 or 10 years from now. So as we think about which sectors, those are very exciting. At the same time, we take a look at the continuum of capital. There's many funds in the Series A and under. We are one of the largest. We have the largest Series A fund across the region, which was our Fund 3. And then when you take a look at the 50 or 100 million or $500 million tickets that people are happy to write in the region and make the front page every day, those are available. But when founders go to raise $20 to $30 million, that Series B gap is very acute. It's similar to where Europe was 7 years ago. So we've come into the market now raising a fund that is focused on Series B. When companies have $30 million of revenue, they're usually about EBITDA positive in the region because of the lack of capital in the region for the region. And so we come in and we back those winners. They're already established winners, and it's really about accelerating their growth with rocket fuel. Okay, so you're looking to fill that gap. What is that increase in capital flow that we touched on at the top of the interview doing to valuations in the region? It's not really changing them much. In Saudi Arabia, we do have some valuation inflation. In the UAE, what you've had a lot of is talent coming in. So the UAE has really taken down its talent borders over the last 5 or 10 years. So you have many second and third time founders coming into the UAE, setting up their next companies there, being able to attract and hire whichever talent they want in the world. And then off the back of that, their earlier financial backers are also coming in and supporting them and funding them with very reasonable valuations. So I don't think there's a regional valuation hype. I think there's an AI valuation hype, but I don't think that's specific to the region. It's more sector specific.
We've been talking this morning about the IPO pipeline starting to pick up in Europe. What are the conditions that are in place in the Middle East right now when it comes to IPOs? The clearest path to exit for your portfolio companies?
So last year we had a record number of IPOs in the region, which was 30% higher than the year before. We had 54 IPOs last year in the tech sector in the region. So our IPO windows have actually stayed open, and we've had increasing number of IPOs over the last few years.
You think that momentum continues
I think
into next
continue.
year?
I think it does continue. We have 2 companies in our portfolio that are looking to IPO in the next 12 to 24 months. One just had a $4.5 billion valuation. So that exists in the region. They're not as common as other parts of the world, but I started the firm 7 years ago. And if you had told me back then to imagine where we would be today, I would not have expected the industry to grow 6-fold, the number of IPOs to grow as they have. And I expect the same going forward for the next 6 years.
What are the biggest constraints to the region then? I mean, you're touching on metrics that show that there is momentum, there's real growth, the capital flows are there, the IPO environment is there, you're talking about the talent that's being attracted to the region. What are the constraints at this point?
I mean, right now, I'm going to say the biggest constraint is the Series B funding gap. So as companies get to scale and they really want to just inflect, and they are profitable because of lack of capital in the ecosystem compared to other ecosystems. So, great numbers, but MENA last year had $2.4 billion of funding. The world had just over $300 billion. So when you take a look at this market of 400 million people with such a small amount of funding, yes, the numbers growing are great, but the quantum of capital is still not that great. So as we think about this Series B gap and really funding that gap, that'll allow that continuum of capital to grow, and then those $50 and $70 million tickets will have a much stronger pipeline, and you'll have more and more IPOs. That's the only real constraint that we're seeing right now.
And you've mentioned Saudi Arabia a number of times. So does Saudi Arabia, is Saudi Arabia the key kind of nation within the Middle Eastern region that is a key driver of this activity? How widespread is this, and how dispersed is it, or is much of the activity focused in Saudi? How important is Saudi to this story?
It's one of 3 markets that we are very excited about. So Saudi is important for Saudi. We see lots of innovation there. We have a company there called Hakaba, which has now had CNBC and Statista, have it as one of the top 10 fintechs in the world. We've had a company there called Tabi, which is the first BNPL, or one of the largest in the region. And that's important because it's the first line of credit. So we're still less than, I want to say, like 80% credit card penetration in the region. So when we think about that, that's really solving a problem. When we think about the UAE, that's breaking barriers, because in the UAE you have lots of companies that are building globally. So it's innovation at its best with the world's best talent. That's where the UAE plays. Egypt builds for the region. So those are the 3 markets. Each one has a different story.
Noor, fantastic. Thank you very much indeed for your insights on the region and the capital flows. Of course, Noor Sweid, General Partner and Founder of Global Ventures. Guy, back to you.
Tom, great interview. More to come. Fantastic conference, fantastic interviews. While Tom was talking, bit of breaking news. Zurich Insurance saying it won't tender its Sabadell stake in the offer. It's not impressed with what BBVA is talking about. We'll come back to that story. We're going to talk to EQT next as well. That conversation is next. This is Bloomberg. Welcome back. You're watching The Pulse. I'm Guy Jonsson in London. Let's give you a quick update on what you need to know. Got a 2-day deadline. The outgoing French president, not the outgoing French president, the French president giving his outgoing prime minister 48 hours effectively to negotiate a deal with opposition parties, basically trying to stave off a deeper political crisis in Paris. And the US president opening the door a touch to negotiations over healthcare subsidies with the Democrats in Washington. However, and this is a big however, he is insisting that the government must reopen first. Not entirely sure the Democrats are going to go down that road. So that's kind of the scene at the moment. Politics dominating on both sides of the Atlantic. But let's talk about what is happening in markets. The Swedish investment firm EQT has nominated its Asia chief, Jonsson, Salata, as its next chairperson. The appointment indicates a deepening commitment, you could argue, to Asia, where EQT is building on its momentum that it's already got from a 6.8 billion euro acquisition of Baring Private Equity back in 2022, which kind of effectively brought Zahn in. Joining us now from Singapore for an exclusive interview, the current chair, Conni Jonsson, and the incoming chair, Zahn Salata. Guys, thanks very much indeed for spending some time at this momentous moment for your firm. Conni, let's start with you. You've got your guy. He's sitting next to you. Why is he the right person for the job?
What can I say? He sits here. No, no. He's a super good leader. He's a good entrepreneur, and we care so much about soft issues. So we care about his personality, his style, his values. But also, before everything else, he's a super good investor. He has been built Barings, and then when we came together with him, we were able to integrate Barings in EQT, but together build a global platform. And he's a perfectly positioned leader to continue to build this platform into the global leader that we aim to become.
So a great investor and a great person. Wow, that's quite the compliment that you get coming from Conni there, Jean. Let's talk about kind of where you do see this firm going. Conni's set you up. He's got a great business. He's handing it over to you next. You are Asia-focused. You have been Asia-focused. Is that where we now see EQT's balance being? Is that the trend that we could follow in terms of where EQT goes next?
Well, Conni's handing over the business at a time when it's never been stronger. And so we're in a position to really take advantage of all the opportunities in our industry that we see today. I think the opportunity is certainly in Asia, but it's really a global opportunity for us. We're a very global company today. Asia is an important part of that story. We're both in Singapore right now. We're having our board meeting here today and tomorrow. So it's a really critical part of our strategy. But we see tremendous opportunity for us to continue to accelerate our growth and drive our growth agenda that we've set out in our strategy.
Conni, is this a shift, though? I think that's a question that people are asking. A couple of months ago, I think it was in an FT interview, but I think I may have seen it elsewhere, you talked about the fact that the focus should be on the United States, that's where the balance of the business should be. You talked about maybe doing takeovers in the United States. Has that changed?
Well, the U.S. is a big market, and we are too small in the U.S. We should be bigger there. But the long-term growth for us and for the world and for our industry is in Asia. And we don't really see those markets sort of competing about our attention or our capital. We look where we have the best investment opportunities to make. The key for us is that whatever we do is like a planned process. This change doesn't came up yesterday or the week before. I've done 5 CEO successions, all nicely planned with good candidate and a well-thought-through process around it. So it's no change. It's a continuation to build EQT into the global platform that we hope it can become.
Global platform. That is the key words that I'm hearing time and time again from you this morning. Conni, just to stay with you for just a moment, and I'll get Jean's take on this as well. We're starting to hear talk that investors are looking to European firms, though, because they offer diversification, because they don't want to put money into the United States, that they want a more global benchmark in terms of the way they see their businesses needing to invest. Is that something that EQT is seeing, and is that part of that kind of that global story that you're talking about?
Yeah, we have the luck to be ideally positioned to exploit that trend, and it's a very logical trend because people understand with the geopolitical risks we see around us, diversification is critical. And we are very strong in Europe, we are very strong in Asia, we are weak in the US. But the diversification of what we can offer our investors is exactly what they're looking for right now. And it's not so that we're just buying paper, shuffling those around. We buy companies, we manage companies, we have people on the ground, we're local with locals. And that's a unique setup that I think we are rather lonesome about. And that's going to be the success, or the key to our success going forward.
Yeah, I would agree with that, Guy. We're seeing investors really thinking about rebalancing their portfolio and diversifying more, as Conni's saying, to Asia, to Europe. both because I think of geopolitical considerations, but also just in terms of valuation and even things like portfolio construction and portfolio concentration, correlation around the whole technology space and the technology names in the U.S. And whether they feel like that is stretched and wanting to rebalance and diversify more into global markets. So that's something that we're seeing in our business, and it's benefiting our business, actually.
Jean, do you see that? You talk about benefiting your business. Is that going to make fundraising easier? Because the other thing we're hearing as well is that there's caution in the fundraising world right now, and some firms are struggling, others aren't. But maybe that geography that you talk about, that sort of home bias here in Europe, that Asia focus, that opportunity, do you think that's going to make fundraising easier for EQT?
I think the answer is yes to that, and I think part of that's driven off of this dynamic. But part of it is also driven by the distributions that we're making from our investment programs back to our investors. As we've announced in our public information, we've had a record year of distributions, something like 20 billion euros of distributions back to our LPs at a time when people aren't seeing that many distributions. So it's a combination of performance, distributions, and some of this portfolio diversification, geopolitical considerations.
Conni, in the past, there has been a focus within the portfolio on renewables businesses. Now, clearly there is, and you can see this, obviously, what's happening with Ørsted at the moment. There's been a significant amount of turbulence in that space as a result of what's happening in the United States. Are you going to stick with that? As you think about Europe, as you think about Asia, do renewables and that side of the business maintain a significant portion of the portfolio?
Not a significant portion. And we are, of course, adopting the strategies where we think the investment opportunities are mostly attractive. Today we talk about energy transition. We talk about technical services. We talk about technical integration or technological integration cross geographies and cross sectors. So it's not so much renewable in itself. I think we are extraordinarily well positioned to exploit that, being in the US, in Europe, and in Asia. Technology is traveling cross borders, and we need to be able to participate and play and follow what happens in each of the 3 different geographies that we're operating in. So renewables is there, but it's not an important, and it has never been energy transition has been what we've been focusing on.
Okay, I guess I'm probably widening the lens a little bit too much. Jean, there's a number of key questions around AI at the moment, so I'm curious to get your take. In terms of the portfolio companies, what are you seeing in terms of the impact? What do you see going forward from here? How is EQT using AI in terms of its investment decision-making process? It's a question that all investors are asking at the moment. How can I use this technology? What impact is it going to have? What is your answer to that question at the moment?
It's at the very top of our strategic agenda for the business. We are embracing it internally. We have teams of data scientists working on that internally. We have our digital value creation teams working with our portfolio companies. I think there's a couple key things happening here. Number one, first and foremost, this is a productivity tool that can be used by EQT to drive our investment performance and the efficiency in our business. But more importantly, I would say it's a productivity tool across all the industries and sector thematics that we invest in, which is critical for driving value creation as we move forward. Secondly, I'd say that what we're seeing in our portfolios is that having the right leadership team in place, those CEOs and management teams that get it and that are embracing AI quickly and moving quickly are going to be the ones that stay ahead and get ahead of these tremendous technology trends that are happening. So it's a critical part of our future strategy, and I think every single company in our portfolio needs to be focusing on this.
Absolutely, and I'm sure your investors will be pleased to hear you say that. Guys, just before I let you go, Conni, I have to ask the question. This is the end in terms of your chair, but clearly not the end of Conni Jonsson, and I suspect we're going to be hearing much more from you. Let me ask a simple question. What is next?
I have a rather diversified private portfolio focusing on entertainment. I'm sure that many of you have seen ABBA Voyage in London. That's one of the projects, and I like to work with sort of things that is changing. So the technological change forming the future entertainment market is clearly an area that I like. But also biodiversity. I'm a little environmental muppet. I like to invest where we can make some good impact for the environment. And so you will see me. You will see me in a couple of different sectors like that.
It sounds like you're going to be busy. And we've not seen the last of you yet, which I never thought we would anyway. Conni, great to see you. Thank you very much indeed. Jean, thank you very much indeed for your time. We look forward to hearing from both of you again very, very soon. Thank you very much indeed for your time. The outgoing, the incoming chair over at EQT. Let's take this conversation at a different angle. Former ECB President Mario Draghi believes we are entering into a new world order marked by geopolitical and economic risks. He spoke to Francine Lacroix about why he thinks a more volatile era is now upon us.
Neither the US nor China do have this sort of experience of living together, which means we're going to live in a riskier world than we were 5 years ago. But it's also a special time when we see the rise of many new things, AI, which is transformational. I think the parallel with electricity when it came out is quite right. It's going to change all aspects of our society. And it's going to be a world where there will be new winners and new losers. And the winners are clearly the countries that already hosting high-tech, digital, like the United States, and in part, lesser part, Europe. But also the winners are going to be the countries that have natural resources, the rare earths. And the losers, well, the losers are going to be the isolated countries, the lost countries, probably Africa, most of the developing world. So that's another feature of this world.
What macro risks do you see because of this changing world where you also say that actually we don't know the blocks that will emerge in 5-10 years?
Well, it's a lot of macro risks because you have political risks and you have economic risks derived from the policies that have been put in place. The political risks obviously come from what I just said. I mean, the potential instability of this situation. So any change for the worse. Markets typically don't price this sort of risk. Markets price the risk that they can actually assess. They don't price structural shifts. Usually if you have a war, they price containment of the war. They don't price victory or defeat or big invasion and so on. So today I think we see only a small part of what's happening in market prices. And so that is one risk. But then we have risks, typically more traditional risks like inflation. We have liquidity risks. Again, this generation, I think all of you lived in a situation where liquidity was exceedingly abundant. And it could, we learned, everybody who's lived through the great financial crisis knows that it's abundant until it's not. And it dries up quite quickly. And then you have risks connected to fiscal sustainability. And then you have risks connected to the downturn of China. Do we know whether this is going to be structural? How big is this going to be?
Draghi sees a lot of risks out there right now. That, of course, the former ECB president, former Italian Prime Minister Mario Draghi, speaking to Francine Lacroix in New York. What are we going to be doing next? With the UK said to be considering tax relief to help revive the London IPO market, we are going to talk to the CEO of Quantexa. A CEO startup conversation coming up next with Tom McKenzie. This is Bloomberg. Welcome back. How worried should we be about what is happening with the US government shutdown? Ken Griffin, a little concerned, I have to say, over at Citadel, saying neither the Republicans nor the Democrats are, quote, stepping up to the plate. He spoke to Francine Lacroix in New York.
The shutdown is symbolic of a different problem, which is the dysfunction between the Republican and Democratic Party on resolving issues with respect to the budget of the United States of America. And to be clear, both parties today are guilty of just profligate spending. You know, as I said at the start, the U.S. fiscal situation is that of a nation that's trying to work its way out of a recession, except the reality is we're multiple years into a very high period of growth. This is where we should be running a deficit of in the Clinton days, we ran a surplus. At this point in the business cycle, we're now running a deficit of close to 6 to 7%, depending upon where a number of things land. That is just completely irresponsible. And so what's amazing is we're having a shutdown debate over, in the scheme of things, a relatively small amount of money, and neither party is stepping up to the plate to deal with or grapple with the reality that the United States needs to endure a fair amount of fiscal reform to be on a path for long-term sustainability.
Why is it not being talked about?
It's politically unpopular, and unfortunately politics have gotten shorter and shorter and shorter in horizon. You know, can you imagine that, like I said, in the Clinton days they signed a budget with a surplus? And yet that was in our lifetime. It's been a long time since we've seen that level of discipline in Washington around managing the affairs of the U.S. economy.
You worry a lot about debt, or you worry about debt. What's the way out?
Well, I mean, you must also, we all have to worry about the level of debt we have in the United States.
And France, and the UK, and the list goes on and on. Ken Griffin talking about that problem that nobody wants to talk about with Francine Lacroix. Let's move on from that dismal debate. The UK government is reportedly considering tax relief for shares of newly listed companies to help revive the London IPO market. The Financial Times says 2 to 3 years of stamp duty relief could be announced in next month's budget. But will it be enough to convince companies to list in London? Let's try and answer that question by going back to the JPMorgan Tech Stars Conference and Bloomberg's Tom McKenzie.
Guy Jonsson, thank you very much indeed. And I promise I will put that question to our next guest, Vishal Marria, CEO and founder of Quantexa, the data intelligence and fraud and risk software company, valued about $2.7 billion US dollars. You've recently raised $175 million. I said to Guy, I'm going to ask you a question about IPOs and changes in the landscape here in the UK. I'm going to get to that, but I want to start. Give us a real-life case study of how your software is used.
Thanks, Tom, and it's great to be here this morning. So we serve multiple industries, if it's banks, insurers, government, telco and healthcare. And within those industries, those use cases do vary. One I will talk about is something that we're very proud of. We're supporting a very large Asia government around border security. So land, sea or air, people or goods that enter the border goes through our platform. So if you imagine on a scale perspective, we are supporting connecting, contextualizing over 2,000 back-end systems, connecting them to understand should this person or this individual or this cargo enter the border, yes or no. For that particular reason, risk, security, things around human trafficking, sex trafficking, drug trafficking, these are all types of use cases that this particular entity uses us for.
Okay, so that's a case study, that's an example of a real-life implementation of your software. What level of growth are you seeing right now, Vish? You've seen this, you've raised a lot of capital. What is the growth pitch? Give us some metrics in terms of the pace and momentum of growth.
So the tailwinds of AI and adoption of AI when it comes down to generative AI, all things like predictive AI, machine learning, deep learning, and so on and so forth. That's been at the core to our business since I started Quantexa in 2016. Now, over the last 3 or 4 years, what generative AI has done has fundamentally made AI a board-level conversation.
What is that doing for your annual recurring revenue? Give us some ARR, give us some metrics in terms of the growth.
So from an ARR perspective, we continue to see great growth. Over 40% on top-line growth is something that we monitor, something that I monitor back to and report back to my board. But there are other metrics than just ARR growth at 40%. One thing we're also very proud of is our net retention rate. So this shows where clients are not just using our platform today for one use case, but they're expanding the use. And on that particular metric, we're over 120% when it comes to net retention, which when you add the growth rate, as well as NRR, as well as exiting the year going into profitability, are really good metrics for my business.
Okay, so you exit the year going into profitability, you have the cash on the balance sheet. Do you pull the trigger on acquisitions, and if so, what?
So we did do an acquisition a few years ago where we acquired Alien Technologies, which fundamentally supported our platform growth around unstructured text. And you're absolutely spot on, Tom. We've raised money. We've raised money both for organic, so more product launches, more product growth. We launched Q Assist earlier this year. We launched last month our Q Cloud AML for the mid-sized banks in the US. And we've got a couple of big releases coming out in the next few weeks.
Okay.
But we've also put a slug of money around acquisitions. And we will continue to look at the market when it comes down to M&A, what supports us both at the platform level, but also at the vertical industry level too.
Is an IPO in the offing for 2026 for Quantexa? And if so, are you thinking about London?
So when I started Q back in 2016, it was about building foundational technology. And we serve over 65 enterprise clients around the world, over 15,000 end users, and we have done substantially well when it comes down to events, if it's series raises from ABC and so on, but also growth in the firm. If we look at a public event, we will be looking at lots of different types. If that's continue staying private, if that's go public, and obviously if we do go public, there is a conversation between London and New York.
And this could be a 2026 proposition for Quantexa. An IPO in 2026 is a possibility, Vish.
All options are on the table.
Okay.
Timelines dependent. All options are on the table. If that is a 26 or a 27 or a 28,
okay,
all options are on the table.
There's some reporting suggesting that there might be in the budget a moratorium on stamp duty for companies that list in the UK. Would that be significant? Would you welcome that? Would that be something that you would factor into your decision?
So the key thing around the UK and in particular London Stock Exchange is around liquidity. Getting more liquid into the exchange is really important. To ensure investors are deploying cash into the stock exchange, as well as having supply of great companies into the exchange, is another key factor. Things like stamp duty on stocks, which is just a UK thing, is not in the US, are great measures that I know our Chancellor with the London Stock Exchange are working very hard. But there are multiple things that needs to happen. Stamp duty on stock is definitely a key one, but there are multiple other things as well.
What else is holding London back, do you think, as a listing venue?
So I think there's a few factors here. So one thing around relief when it comes down to entrepreneurs relief, we had a change when that happened a few years ago in the last party or the last set of politicians. Now, one thing I would say, it's not just on the exchange or the government around this. Getting more supply into the exchange is very important, but there's a cultural piece. In the UK, growing businesses is a great thing to do, but we need to adapt more of an ambitious culture, which our colleagues and our friends across the pond do have. So there's not just metrics or policy, there's also a cultural piece to get more supply into the exchange.
Okay, which is arguably more difficult and more challenging as well. Vishal, Marria, thank you very much indeed. CEO and founder of Quantexa, on the possibility of a public listing at some point in the next couple of years. Guy?
Tom, we'll look forward to that. Thank you very much indeed. Fantastic conversation. Another fantastic conversation. Tom McKenzie down at the JPMorgan Techstars conference. He is not done yet. There are more stars still to come. Maybe right up at the top is a conversation with Jamie Dimon. That conversation with the CEO of JPMorgan is coming up at 4:40 p.m. London time. Everybody needs to tune in to what he has to say. It's going to be a great conversation. Quick look at European markets before we hand over to the United States. This is the picture we have at the moment. European markets reasonably becalmed. Look at the CAC. I think that's the key tell right now. The CAC 40 is only down by 0.1% after a big drop yesterday. Actually, it's the luxury names that are holding that market up this morning. We're going to hand things over. The United States is up next. Bloomberg Brief is going to set that session up. That is what is next here on Bloomberg Television. This is Bloomberg.